Fearless Disease.
Is this just profit taking in your mind? I mean, is that all that's really going on? Because we were hoping for a Santa Claus rally. We've never missed it 3 years in a row. We did miss it the last 2 years. I think a lot of people were very bullish on these last days of the year.
Yeah, I think it is profit taking. I think that's accurate. I also think what's going on in the precious metals market is a little bit of a reminder how you need to think about risk and how you're going to be treating the management of risk as you move into 2026. I don't think the environment of 2026 is going to be very similar to what we've seen here in 2025, which for the majority of the year, excluding the period surrounding Liberation Day in April, it's been a pretty calm environment, an environment where if you find a trend, you could attach your positioning to the trend and you could ride the trend. I think it's going to be a little bit more difficult, a little bit of fits and starts, more of a rental market more than an ownership market in 26. And I think that's what's being reflected today. And certainly what we're seeing with the volatility and significant parabolic move and reversal in precious metals, in particular for silver, I think that's indicative of the environment.
Bryn, coming over to you. How
FearlessDisease fam, today we expose the truth they hate to hear. Like right now, if you are ready, as they showed on the screen already. My main thing about talking about stocks today and indexes and indices. Of course, the end of the year wrapped up. It was a wonderful year, especially if you were in the market. And you see S&P 500 closes in 2025 up 17%. The NASDAQ, it was up 21%. The Dow was up 14%. And AI hype drove a lot of gains. But last session slipped on the trading and tariff. They're kind of bringing in, I would say, I wouldn't like to say it, but with FearlessDisease, they brought a lot of fears. But as we see that the tariffs, they brought a lot of income when it came to the markets, just because it hurt a few people's pockets for just a little while when it came, of course, groceries and gas and stuff like that. But it really did well in the markets, and after a while, it's gonna snowball over to lowering our gas, make sure grocery prices are going down. They did that towards the end.
How are you viewing with the action that we're seeing today? I want to ask you the same question. Do you just think it's profit taking? Is this a sign of anything else going into 2026? We just heard Joe say it's more of a rental market than an ownership market.
No.
I mean, we've had a great year.
I don't think so. Just because it's going down a little bit towards the end, overall it was a wonderful push. I think it may stay down just a little bit during the beginning of the season, which is the first Q1, maybe January. But I think it's going to rise right back up, especially going towards the warmer months.
All right, the Qs are up, 20, 21, the S&P's high teens return. So whatever happens over the next 2 days, I don't think portends to what happens next year. Sure, today could be profit taking. I do think next year, though, to me, the big setup where we could have, again, a bunch of volatility is really around the Supreme Court decision around the IEEPA and the Trump tariffs. If that goes against the White House, that would be incredibly chaotic to undo. And so I think that event, whenever that clears, could potentially be a nothing burger if they side with him, or to me, an event that really creates some volatility. I do think, though, 2026, we will have volatility like we had most years, but I don't think we're going to have a benign market that just goes straight and up to the right.
All right.
It's very true. It's going to bounce right back.
She's mentioning it. Jim, I want to come over to you. Just the idea of the tariffs might be overturned. Some other hurdles coming up next year with the Fed and a couple other things. We had Jeremy Siegel on our air earlier today. He mentioned some of those things. He was actually very bullish about the 493 as opposed to the Mag 7, seeing those as really the drivers for the action in the new year. Do you agree with that thesis that, assuming that those things get unwound in a benign way, whichever way that is, whether it's struck down, held up, whichever way the market sees it, it's really the 493 that are the drivers next year?
So before I answer that question, allow me to just set the context because I think this matters. I find it hard to believe in any way that there will be a recession in the next 12 months. And absent a recession or a meaningful scare of one, it's hard for me to believe that we will have anything other than a positive return as measured from December 31st of 2025 to December 31st of 2026.
Exactly what I said. There's not going to be any scaring people because the tariffs came around. There's going to be a recession, anything like that. The markets will look wonderful, man. Just because it was a little spike in groceries and gas and people want to panic a little bit, that has nothing to do with the overall market and the overall health of America. People cry about the minor and they don't understand the major when it comes to our economy.
However, within those 12 months, I do think there will be a lot of volatility. I think it will be, to Bryn's point, I think the top of the list as far as reasons for volatility is the IEPA potentially, most likely being overturned by the Supreme Court. Now, the president will find other ways to institute tariffs, and we'll get through that, but it will create a ruckus. There is likely to be geopolitical issues going on. We've got very high earnings expectations, and even if they're disappointed a little bit, they still will be great earnings growth. Remember, Frank, we're projecting 15% year-over-year earnings growth next year for the S&P 500 as a whole. What if it comes in 14%? Well, for a market that's trading at roughly 22 times next year's earnings, that's going to matter. Now, I put this all together. Where did I start? We're not going to have a recession. We will have a positive year next year, but there will be volatility. And to me, now I'm going to answer your question. Thank you for giving me the runway. I do think the opportunity to hedge most of that volatility comes in looking at the other 493 stocks or the other sectors outside of technology. Not that technology is going to do bad, but that's just probably, given prices, where the most volatility is going to be. So we do favor the equal weight S&P 500 as a tactical trade here. And I do think financials, industrials, materials, energy, and healthcare are sectors to look for in 2026.
Jim, you had a lot to say.
I love it, man. I mean, he made a lot of sense. I knew with him, he made a lot of sense. It's gonna be a great year, especially from December, just ending now, all the way up to December 2026. It's gonna be a big rally. People are gonna make a lot of money. It's gonna be great for people that really know what they're doing in the markets. Mega caps like Nvidia. I mean, that led. It was amazing. Nvidia with their AI growth has been amazing over the past year. And small caps, they're gonna lag. Even gold and silver, they dipped, but crypto soared earlier last year. So I think that it's gonna be able to keep going, especially with crypto. It did peak a little bit during the year and dip down. That's what it's gonna do. It's gonna catch the people that wanted to go down, but it's gonna skyrocket even more. So statistics already show that, or big investors already are telling us that at least crypto is going to get to at least $1 million. It's going to get there, but it's going to take time. It has to go up then down. Nothing just goes straight up. So hold what you need to hold, buy what you need to buy, and don't become so scared in the markets. We stay fearless over here. My prediction in 2026, it starts. The volatility will keep going as Trump keeps on politicking more and more and more, keeps on talking more, keeps on ending other wars, more and more peace. He's gonna push the tariffs a little bit more. It's gonna make us, the people that are smart, make them very, very wealthy. Create a lot of different what the young people say, or some people say, generational wealth. If you stay smart in these markets, 100% believe in that. S&P is going to continue to test 6,500, or it may dip down to maybe 6,500 for the tariffs, but it's gonna go right back up. 6,500, or it may dump down to 5,500. We will see in the beginning Q1. But other than that, smash that like, tap the next video here on the screen, subscribe, and hit that bell. CashApp FearlessDisease always in the description if you are rocking with the movement. We'll see you on the next one. Stay rich and stay fearless.